From the floor of the CME Group, this is Danny Riley on this Monday, February 22nd. The theme for the day is quiet. We're quiet at every pit on the floor. In the grain room, over in the interest rates, over in the meats, and here. Right now, the S&P is pretty much unchanged on the day. As far as the rest of the floor is concerned, they've got about 20,000. They've got about 20,000 volume over in the 10-year note options. That's very low number. About 165,000 volume over in the Eurodollar options, and they've got about 14,000 options traded here in the S&P options. Like I said, the markets are pretty much unchanged, and we're going to let Tim take it on the technical side of this. But one of the things that we're going to do is we are going to talk about some of the stats that we're looking at. Coming in today, the stats the day after the February expiration is a negative day. It's a down day. Out of the last 26 occasions, 11 have been up and 15 have been down. So thus, it's a negative day. But on the flip side of that is you've got our, what we call Mutual Fund Monday, which has been up, I'm sorry about that, 17 out of the last 21 occasions, and actually down last Monday. So that streak has kind of broken up a little bit during the move down in the euro and the recent rally in the stock market. You know what, look at, we're up against some big levels here, and I think that Tim could be better at explaining that. But as we said, some of the levels that we're looking at were the 1090 level, which we already passed through, and then the 1108, 1109 level, which we traded above last week. And then Tim's going to talk about these moving averages and some of the bigger levels above the market. But on a kind of a feel from what we're talking about at the desk, the markets really seem like they're in need of another pullback right now. You know, we're not really sure which way the markets are going to be going, but going over the next couple of weeks. But we do have a feeling that this is not over yet. You know, everybody's tending to get friendly with the market after it rallied, and that's generally not a good thing. You know, you want to buy the market into weakness and you want to sell it into strength, and generally that's the best way to play the game. And one of the things that we've been talking about at the desk is how when the market sells off, the first thing that it does is it takes out a lot of the weak longs. And then in the second phase of the sell-off, they get everybody short. And that short usually is done at bad prices. These shorts are usually put on at bad prices. Now, the most recent up move, what they've done is they've taken out a lot of those shorts, but they've yet to get really people convinced about being long into this upper end of the range. You know, 1150 is our most recent high, up toward that. And right now, we're 1105. So we're only 45 handles off the contract high. How bad could it really be? Listen, I get a little confused. Top step, top notch. We'll let Tim take it from here.
Even though I'm on the top step, I am this is top-notch trading right now. Anyway, we're in a position right now of some technical moves happening. We came back from the New Year's weekend holiday, and the Globex session makes a 11-13-20 low. From there, we made New Year highs. The Globex was 13.20, as I said, but we opened up on the regular session at 11.1970 with a low of 19.5, and then took 3 weeks and we triple topped, making a 47 even high on the regular session. Then on January 21st, the S&P future saw a move down to 11.08.5 in the Globex and the regular session. On January 22nd, we come up. Globex high is 11.1570. The regular session sees a high of 11.11.5. That took us down to the year lows. Notice now, I mentioned we opened up the year low at 13.20 in the Globex session. The Globex session high today is 12.70. Kind of funny. The regular session high was 11.11.5. 2 days running now, we're seeing 11 even high from Friday and today on that regular session. Now we got to see if the Globex trade, or actually the regular session trade, sees a high above 11.13.20. We should see a test of the 11.19.70 level, and we'll take it from there. If they fail to get above these levels and take out, I believe, about 1084, we could retrace back down to that 41 even low for the year. It remains to be seen. We're taking it one step at a time. That's it from Top Notch for today.